You are welcome to financial management presentation. And in this session, we are going to focus on three key decisions in financial management. But first of all, what is financial management all about? Financial management is about the best way you can use your money. And in order to find the best way of using your money, there are critical decisions that are made in financial management. And these decisions are narrowed to three. But before we go to those three decisions, what is the objective of financial management? The objective of financial management is mainly narrowed to two. One, maximizing shareholders' wealth. By this we mean increasing the share price or value of the investment, or by paying dividends to the shareholders. Number two, as an objective, is profit maximization, to maximize the profit. Now, how do we do that? We do that by making three key decisions, and those are said to be three key decisions in financial management. The three key decisions are: one, investment decision; two, financing decision; three, dividend decision. For the sake of this presentation, we shall focus on two only, and these are investment decision and financing decision. Investment decision. In investment decision, we are trying to answer a simple question, and that question is: where am I going to invest my money? If you want to start up a business, where are you investing your money? And in financial management, we have three areas where you can invest your money. And these areas include capital asset investment, or investment in capital projects. Number two, investment in working capital. Investment in working capital, we are referring to investment in inventory, investment in receivables, and investment in payables. The third area of investment is financial assets, investment in financial assets. Here we are making reference to the fact that you can simply buy shares in another company. You can simply take your money to the bank and earn some interest. That's investment in financial instruments. Now, as you are considering where to invest your money, there are four major considerations that you need to take into consideration. These considerations include: one, returns. The purpose of investing money in a business or in an asset is that you should be able to get a return. The second consideration is risk. Businesses can be risky. You can lose your money. So you have to consider the risk of investing in that particular business. So what we say is that the higher the return, probably the higher the risk. So if a business is high risk, our expectations are that the returns will also be high. Why invest in a business which has got high risk, yet the returns are low? The third consideration is cash flow. When we are looking at cash flow, we're making reference to the fact that on a daily basis, you need some funds, you need some money to run that business. If you invest in a school, for example, a college, you want to have a college, and you're investing in buildings, you must also know that on a daily basis, you need to buy stationery, you need to pay your teachers, and so on. And that is cash flow. So you must also take into consideration the levels of cash flow that is required to operate. Finally, on the consideration is profitability. Why do you run a business if it's not profitable? So you must consider profitability. That is financing, that is investment decision. The second decision is financing decision. Remember, we have said there are three decisions in financial management that you need to consider. And that is investment decision, where are you putting your money? Financing decision as number two. In financing decision, you are answering a question. Where will the money come from? If you decide to invest in a particular business, you must answer a question. Where will the money to invest in this particular business come from? So in answering that question, there are four other questions that you need to answer, because this establishes the sources of funding. Where does the money come from? The first one is to say, what is the total funding required? Don't go into a business when you have not yet established how much is required to set up that business. Number two, is the funding internally generated or externally generated? Are we generating it within our means, or we need some external funding? Number three is this funding by debt or by equity? Debt, are you going to the bank to get a loan, or it is equity? Equity is your own money. You can team up with other business colleagues and make a contribution and set up a business. So you must be able to answer those questions. The last one, related to debt, is this debt, if you are going to borrow, is it a long-term debt or a short-term debt? Because the cost of debt is also tied to the period. Therefore, you must be able to think through and say, am I getting a long-term debt or a short-term debt? We have said, for the purpose of this presentation, we will not go into the third decision, which is dividend decision. But we were focusing on two decisions in financial management, which is investment decision, where am I going to invest my money? And financing decision, where will the money come from? Shalom.